All right, 10 p.m. here in California. Well, actually, I'm not in California, but uh, we can start the meeting. Let me start by introducing today's presenters. We're going to be having two sessions: secrets of stock trading or day trading, as Dhawal has put it, and secondly, how to come up with an optimal insurance coverage plan for yourself, especially with this COVID going on. Only source of income for your family, and having better coverage is the right way to go. So, both are very interesting topics. And about the speakers, Dhaval, I got to know him just few weeks back when we migrated our group from WhatsApp to Workplace to Telegram, and Dhawal joined that group, and immediately we connected. It was very obvious that he's a very skillful trader. He does both day trading, long trades, short trades, you name it. And he's an engineer by profession, like most of us. So he's going to be talking just old guy and how he does, and he does very high volume trades. So it's not that he's some, so we'll be learning quite a bit from him. And Shankar also, I got to know him few weeks back through a mutual friend, a school friend, uh, 25 years, I don't know, more than that, old friend. And immediately when I looked at his article in Money Control, I realized this group is going to benefit. And I asked him, can he make a presentation? And he says, more than happy to do that, because his passion is to help people out. He regularly contributes in our popular financial websites, and he loves helping people out on financial side. He's an MBA by education degree. So without taking much of the time, I would like to pass control to Dhaval. Uh, Dhaval, if you can hear me, let me know.
Hey, Pravesh. Yes. Can you see my screen?
Yes, I can. The floor is yours now.
Okay. Hey, thanks for the introduction.
And if you want, you can ask. Oh, sorry, one more. Guys, I think we all have been now accustomed to this, but if you're not going to be speaking, please do put yourself on the mute. It just helps others, you know. Thank you.
All
All
right.
right.
Thanks.
Yeah.
Yeah. Hello, everyone. Very nice to meet you all. Thanks for joining. Happy Diwali. Happy New Year to everybody. Happy Thanksgiving if you celebrate that as well. 2020, what a year we've had, huh? uh, Hopefully, everyone is staying safe and healthy. All right, so I'm just gonna dive straight in as I don't want to lose too much time. So this is what I picked up a little bit about secrets of stock trading in the past 2 or 3 years. Um, I am not a professional trader, so please use everything that I say as a with a grain of salt and not recommendation advice. Do your own, obviously, educational review as well on what you're doing. So this is just a disclaimer that this is supposed to be just for knowledge-based purposes. Okay, a little bit about myself. I was born and raised in Surat, Gujarat, western part of India. Came to United States 2006 for my master's in San Diego State University, computer science, working in tech for the past 10 plus years. And started trading about, I think, investment about 10 years ago or so, and trading past 3 years. So picked up a few tricks on the way. So first thing first, trading is the hardest job in the world. So I know 2020 has been a very volatile year. and you must be getting YouTube ads as well as Twitter feed on your thing. Hey, if you can make 40% of the trade with us in a month, 100% in a month, and these are the trades that were successful. Look at how much money this guy particularly made. So all those things are true, but with an asterisk, right? Like they post most of the things uh, which happen like once or twice, and they make big, and then they post, and so that they get the subscriptions. So please be careful of all these services and limit your expectations of what you're getting into. Past 3 years, what I've usually done is if I like what I see in a service, what I usually do is maybe take a trial, monitor them for maybe a month or two, and see if the trading style that they use fits what I like to do as well. And if it works for me, then I go forward and buy the subscription. And if I'm happy, I continue the subscription. Yeah, first thing first, if you want to.
So, Dhawal, sorry to interrupt. Will you be able to recommend some of the services what you're using at the end of your presentation? Like,
Sure,
so
we'll do that.
okay, sounds good. Thanks.
Yeah. Uh, okay. Yeah, what I've done in this presentation is basically I've kept it very, very open forum kind of discussion in the presentation. So feel free to jump in, ask questions if you need to. Stop me right there. Happy to answer questions right away. So to continue, if you want to make money in the stock market, you need to be very, very disciplined. You need to be informed, as in, like, you need to have the right news, and right news at the right time definitely helps, but definitely not fake news or all those kind of things that mutter around. You need to be very dedicated. I basically wake up 5:30 in the morning every day just to look at what is happening in the stock market, just to look at what is happening in the pre-market, and make sure that I have a plan for the day, see how the indices are doing and how the pre-market action has been going, what are the news action going on. Because this year has been very, very hard from the news cycle perspective. A simple news comes out and we drop like 100 points on S&P. So that's the year that we are living in right now. So you have to be a little bit dedicated if you really want to succeed in this. You have to have a system in place. So you need to figure out what works for you best. And the one thing, either it's a strategy, if it's a pattern, if it's an alert-based service or whatever it is that works for you, stick with that. If it works for you, just keep that system going and try on other systems as well, but stick to something that works for you. And the most important thing is you need to figure out your risk tolerance. So sometimes immature traders, they jump into this saying, hey, I saw that this guy made like $10,000 yesterday. I want to know what he does and I want to jump in. And that guy might lose $5,000 tomorrow. And if you copy what he did, you end up with a negative portfolio. And if your account is just $5,000, you pretty much blow away your account in itself. So you need to figure out what is the risk tolerance that you and your account are capable of doing. One of the most important things I've seen is even geniuses make bad trades in this, and vice versa. You don't really need to be a genius to be a good trader. You just need all the things that I mentioned previously, like discipline, information, dedication, and a system. And fun fact is, Sir Isaac Newton lost a fortune on a hottest stock in England. So what happened was he invested in one of the shipping stocks. Let's say in today's terms, it would be something of a comparison of Tesla. So he invested in Tesla, and then he made like 20% on it, and then he got out. So that was a good trade. And then it started exploding. And then he decided, okay, so this is amazing opportunity. So I'm going to jump back in. And he tried to chase that particular stock. What happens? He lost 70% of his portfolio in doing that. So even geniuses make bad trades. So don't be afraid of that. Okay, so I'm going to start with some of the learnings that I've had in the past 3 years, and feel free to jump in if you have questions related to that. So first thing I've seen is never average down in a losing position, right? So everything that I say today in this presentation, use it from a trading perspective and not from an investment perspective. These are completely different things. Okay, so investment is like, okay, I really like this company, and I want to pour some amount of money into it, and I want to see where it goes. It doesn't matter if it goes up, goes down. I want to hold it for a few years, decade. I don't know. Trading is like short-term trading, long-term trading, but basically in trading, you have a goal in mind. So if you see a good pattern, and if you say, hey, I think this trade could work out, and I enter into that trade, and if it doesn't work out, get out of it. Never average down your losing position, because it can really blow up your account. And I've seen it personally firsthand when I was an amateur trader myself. And I've actually seen it with a friend who literally lost $1 million on this. It was just bad strategy. He kept averaging down on losing positions and kept losing money every week. And just don't do this, right? So lots of traders experience this. It might work a couple of times in your favor, that it will keep tempting you to keep doing it. Hey, remember it worked last time, so why wouldn't it work this time? And then one of the times that you really are into that particular trade and you really keep averaging down, and you end up blowing your account, right? So never average down your losing position. One of my first key learnings from the stock trading.
So basically,
Yes.
Hey, Dhawal, quick question. When you say losing trade, loss is determined at what percentage? Is it like 10%, 20%, 30%? Do you have any rule of thumb that you define?
I really don't. I really don't. So that's something that I will cover in the upcoming section as well. It really is based on your risk tolerance.
Okay.
So let's say I bought Tesla at $500. Now Tesla goes to $400. It depends on the size, on your risk tolerance. Do I want to stay in the trade at $400? I don't know. $100 a piece, 20% down, I might just take the loss. But you are very bullish on Tesla. You think that Tesla is going $1,000. So what you can do is like, hey, I want to stay a little bit more and see where it goes. So it really depends on a particular trader's mindset, right? A risk tolerance for you might be different from what it is for me, right? Even in my own day trading group that I have, everybody has different risk tolerances. And some of them are like really, really, big bulls where they have steel balls to hold on to all these things. I usually don't. If I see, this setup doesn't work, I put a stop loss and I get up. I don't average down losers.
So Dhawal, this is Purush. So basically what you are right now talking is of the raw stocks, not in terms of the options, right? Whereby you are covered.
Both, completely.
So you are, okay.
It goes both ways, in stocks as well as options.
I see.
Yeah, so let's say an option, right? So let's say I bought a $600 call for Tesla for this week, right? And I bought it this morning when Tesla was 598 because I thought that Tesla is going to 625. Okay, and today was a short day. But then I know for a fact that when Tesla went from 598 to 595 to 591, probably 595 is the stop that I would use and get out of my option call. But if your risk tolerance is high and you are really convinced that it goes in and you don't care if if you lose that money, you'll probably stay with it and let it expire. So it really depends on your own risk tolerance. But what I have seen myself, success comes from you know uh, using stops, never averaging down, losing position. Those are the kind of things that usually work. And I like to keep it green, even if it's small green, rather than big red or small red, right? So that's my own personal opinion. Okay.
Thanks. Yeah.
All right. So another thing that I've learned throughout this is you might have a good setup, and it's very good when you do, because you really worked it out, and you have to have a goal set. So my usual goal is, if I let's say if I have 40 call options or 40 stocks in a particular stock, right? So I bought 40 stocks. What I do is I set up a goal. I set up a goal that 30% I get out one fourth, 50% I get out half, 75% I get out three fourth, and 100% of the goal met I get out. So that's, again, to see in this, it's not 100% of the stock profit, it's 100% of your goal. Okay. So let's say your goal for Apple is $100 to $120, right? So $20 is your 100%. So 106, you get out one fourth. 110, you get out half. 115, you get out three fourth. And if you hit 120, you get out completely. After that, even if it goes to 150, doesn't matter. That particular trade for you worked perfectly fine, and you took your profits up the way. The reason I use this scenario is that people tend to think that I won't get out until my 100% of my goal is met, and which is fair if they really are convinced. But you never know what happens in stock market. So I tend to use the other way around, where I take up profits while it's going up, and if it's 100% met, that's a successful trade. But I still don't lose my profit if it goes down after, let's say, 50%. It goes down to the same $100 stock, right?
But do you have a time limit in mind? Generally, typically, don't you have a time factor also in mind? That
In
if
options, you do, because options, let's say options, your expiry is this Friday. So what I tend to do is, if I get in Monday, my goal is I want to get out by Wednesday. I don't want to hold it on Thursday or Friday.
I see.
The only reason being that there is Greeks involved, like there is theta decay that happens in the Friday expiry, and the premium really gets killed after Wednesday. So after Wednesday close, when the Thursday opens, and if Thursday is a red open, you're already down 50%, let's say, of the previous day. To make up for that 50%, the stock has to go up yesterday's high and higher than that, about like 10 to 20%.
I see.
So it really doesn't make sense to hold on to that option for that long. And that's why I choose, if it's a Friday expiry, I tend to get out earlier. When I see some profits, I tend to get out.
I see.
But in stocks, it might work different way. So stock trading is a little bit different than options in that sense.
So so coming back to the raw stocks, do you have any time limit in mind? Let's say, my trade I'm going to hold this money for a month, maybe max.
Right.
And if you don't hit my goal at all, you just exit, or you still keep on playing?
It really depends on the trade and how much conviction you have in this particular trade, right? So what happens is, like,
Sorry. Yeah. Go
from
ahead.
my perspective, I usually go with the 8-21 rule. And I keep watching the stock. If the stock is going up, it's about 8 EMA, is about 21 EMA. So it's pretty strong, right? So that's my strength evaluation of a particular stock that I'm in. If by any chance it loses 8-day, I tend to put a stop loss below that, right? So if it loses 8, I sell half and see if it goes back up. If it goes back up, I rebuy that half again. If it doesn't go back up and if it starts going down, 21 is the last piece of support that I use. And after 21 day, if it loses 21 day, that's it. I'm done.
I see. Yes. Thanks.
Okay.
Dhawal, this is Nilesh here. I have one question.
Yes.
So with stocks, right, you said 30%, 50%. It's easy with when you have stocks, right? Like as you mentioned, if you have 40
Yes.
stocks, then, but with options, to follow this strategy, how do you buy options? Do you buy multiple options?
Yes,
for the
multiple
same-
options.
Multiple options. And then you follow the same strategy of 30% of, suppose you have 400 options, then you'll use 30% of that, or you go by contract, like one contract.
By contracts, yes. So
By
let's say I
contract.
bought 4 options for simplicity, right? So and let's say the goal is that, hey, Apple will reach 120 this Friday, okay? And I'm paying up $1 for that particular call option, right? And so my goal is that I want $4 for that call option from where it is. So let's say it is at 116, and I want $4 for that particular call option for the expiry, before the expiry. That is my goal, right? So 30% when it hits, I get out one option. 50%
One
when it hits,
contract. Yeah. Okay.
yeah, one contract. So that's
Understood.
how
Thank you.
usually happens.
Okay.
It doesn't have to be this. This is my system. If I have 10, I use like half and half. I use half if my goal is met, and then remove other half when 100% is met.
So the idea you are following here, the thing you are doing here is you're just trying to capture back your investment, or why you are trying to do this?
What I'm trying to do is trim and trail. That is the strategy which is very proven in the options, at least, maybe not in stock as much, but trim and trail is basically giving you that you're taking profits along the way,
Right.
and you're because you don't know what happens tomorrow. Whenever you're holding overnight, or even intraday, for example, same day itself, if the stock keeps going up and you are getting profits, all of a sudden some news comes out and it drops like 5%.
Right. Yeah. Yeah.
Right? So if you don't follow this system and wait for the 100%, you might actually lose out the entire thing, and you might stop loss out. And I've seen that happen multiple times.
Yeah. Yeah. You're right. Yeah.
So it's basically a trial and error method. You have to figure out your own strategy that works for you. But for me, this particular thing has worked really good, and I really like it.
Sounds good. Thank you.
Yep. Okay. Yeah. So you need to size your positions properly, where you can trade with multiple options or stocks instead of one or two of them. So sometimes what happens is, in this scenario, let's say I want the same thing, Apple 120, right? So someone buys in Apple when it's 116, they buy in $110 call, which is maybe the entire trade. Like $110 call might cost you $1,000. So one option, they have to hold on to the entire trade, and they have to see where it goes. So they don't have the exit strategy at that point to trim and trail their position, right? So instead of a 110 call, I would suggest you can do maybe $416 calls for the same price. Maybe it's $250 at the point. So maybe you get 4 calls in that, and use the same goal. So if your goal is, let's say, if the stock reaches $120, I'll get out of it, or if the option price reaches $5, I'll get out of it. So it really depends on what you want. But multiple options usually give you the benefit of trimming and trailing along the way, rather than using just one call option. But in the same way, if you are buying one call option in the money, it's much less riskier, and it might work in your advantage in that way. that you're not losing too much money on the premium. So it really depends on what your risk tolerance is and how you want to position in that particular stock. Okay. So I know I said risk tolerance, but yeah, this is one of the biggest, if not the biggest, things that you want to learn about the risk tolerance. And this definitely will come with experience. You need to understand what your risk tolerance is. Some people really like bigger profits. And if they have a bigger loss, they don't really care because maybe it's just fun money for them and they want to throw it and see where it goes. Other people like very minimal losses because it's very hard-earned money. I want to grow the money, even if it's very little profit. So minimal losses maybe meaning minimal profits, right? So it's very important to know what works for you. You have to make a decision on your own risk tolerance. So I've as I said before, I work, I do day trading with some of the big bulls, and their risk tolerance is very, very high. Mine in comparison is very low. So if I see one of my option failing, I use a stop loss and get out. They might not. They might want to wait and they might see where it goes and they might hold on to it for a longer time. And even while taking profits, if I see my goal is met, I take my profit out. And they usually tend to stay in for a longer time. And sometimes they get bigger profit. Sometimes they lose some money on the profits. Right? So you really need to decide on your own risk tolerance. But one of the things where I say risk tolerance, because there's risk involved in this. So you need to protect your capital, right? So don't take trades that are bigger than you can afford to lose, right? So if your account is $10,000 that you've put for day trading or stock trading or options trading, you can't go in and buy, let's say, an Amazon call in the money, which cost you like $5,000, right? So you need to really size your trade because that's pretty much like 50% of the account that you're putting into one trade and hoping it goes big. Because if it doesn't, it's going to be a very bad scenario. You might end up losing, if you don't put enough stop losses, you might end up losing like a good chunk of your money in that. So that's really, really important as well, especially in options trading. You cannot or shouldn't put more than 5 to 10% of your account max. That's max. I mean, I usually put sometimes even less, but 5 to 10% is the max that I use if I really like a trade that I see for a weekly or a monthly trade. For a long-term trade, maybe like a leap, that really depends on what you want, and you can actually put more money in that. Because let's say if you want to buy Apple 150 2022 January leap, which is quite some time from now. So a little bit lesser risk involved in that. So you can actually put in a little bit more money if you want to. But for a weekly and monthly trades that you do, especially in options, please don't put more than 5 to 10% of your account. That should be your max. Okay. Okay. Cash is a position. This is very, very hard to do. Especially when you really get into day trading, active trading. There's two types of tradings, right? Like passive trading and active trading. Some people like to do passive trading where they get alerts. They just put in a position and they move on to their life. A few days later, the alert says that, hey, time to cash out of that position, and you just exit the position, make some money. Active trading is a completely different beast. Let's say if you're doing active trading, you have a plan and then you have levels, but then the market just drops on you, and it's being very annoying. It's being very choppy. It goes up, goes down, goes up, goes down. And if you're doing especially options trading, you might lose a lot of premium in that particular day. So on that day, don't be a trigger happy and just do trades for the sake of doing, right? So on that day, just cash, you cannot lose cash, right? So if you're in cash, you don't lose money. You don't make money, but you don't lose money as well. So that's a win, because most of the people who do over trading on a choppy day end up losing a lot of money. So a few good days, but a lot of choppy days like this might actually end up blowing up your account. So don't do over trading on a choppy day. There's a fine line between day trading and gambling, and make sure that you don't cross it, right? So that's one of the primary ways to blow up your account. And if there's no good setup, don't chase the trades. Keep in cash is better than losing unnecessary trades without any setups. So again, setups, strategies, studies that you use are very important. And if you don't find a good trade on that particular day, move on. You don't need to be in that particular trade.
Hey, Dhawal, this is Parvesh. So I think we have chatted also on the group. At least when I used to do swing trading, for me, technical analysis was the only way to go. I never believed in fundamental analysis of the company. What
Right.
would you recommend? Do you do actually fundamental analysis for your options trading, or you don't?
I usually don't. No. Fundamentals, I really don't delve into the finances of the company. I really like the technical analysis part of the things. I'm a charts guy. I love charts. I like to do chart analysis and see how it goes. And I have a few strategies that I use. And if I see something good set up on the chart, I usually go for it. Obviously, the news cycle helps as well in some of these trades. So, a company is doing well or not definitely helps how the company is doing. Like if you're buying a lot of Tesla stocks and you know that S&P is going to, buy like 15% of Tesla or whatever, then you know the stock is going to go up. So that understanding the news on that particular stock that you're trading is important. But I like charts in general when I'm getting into that trade. That's more like technical analysis, I guess. Okay, having a goal for every trade, right? So you need to have a goal, as I said previously, a goal in the sense that don't just enter a trade blindly, right? If someone says, like, let's again, same example, let's buy 120 call option for Apple. What is the strategy? What is the goal? The goal is supposed to be set up at the start of every trade. So your goal is that I want to exit, when Apple reaches 120. Right now, Apple is at 116, right? And then you need to have a stop loss in mind as well. You need to know the levels that, hey, Apple can reach 120, but what happens on a down day? So let's say Apple is 116 and you set your level at 114.88 as your stop. So you need to have a stop and your target before you enter the trade. Otherwise, you're just gambling away your money at that point, right? Once you hit that goal, exit out the trade, regardless of how good the trade feels. Any profit is good profit, right? So let's say Neo was one of the Momo stocks last 6 months or so. You entered at 15 and you keep seeing it rising every day. It's above the 8-day, above the 21-day. When do you stop, right? I don't want to take my profits yet. I want to see where it goes. And it keeps going up. And then all of a sudden, one day, it just goes down 10%, right? So in that particular trade, what I do is usually I go with, let's say I have a goal that, $15 stock I buy. And then if it reaches $25, I'll exit. Because it's a momentum stock, I think it's possible, right? So $25, I set the exit limit. If it goes, it goes, right? And then I have a stop loss as well. So when it goes up, you can usually put a trailing stop loss if you like that, or you can put straight up stop loss as well. Now, after $25, if it keeps rising up and you want to get back in and you wait for, let's say, to hit the 8-day again and you can get back in, that's fine. But that's another trade, right? So that trade starts at maybe, let's say, $27. And then that goes, you're willing to say, my goal is if it reaches $35 or $50, doesn't matter, right? So keep a goal for each and every trade. If you hit that goal, get out. If you want to enter back in, that's another trade, set up another goal for that, right? Take a win for each and every trade that you have. That's very important.
So Dhaval, in terms of your drilling stop losses or stop loss, so you said some stock you want to ride on momentum. Is that criteria? Do you use a volume for a particular stock, or you just use a price momentum? What do you use?
I do like volume as well, but most of the time I like the momentum, and I like how it's riding the 821 on the charts, as well as how it's touching the Bollinger Bands. Usually when it keeps on every day, if it keeps on touching the Bollinger Bands, upper Bollinger Band, I know the stock is very strong, right? And I keep in mind the RSI indicator as well. But sometimes if the news is very hot and stock has a lot of momentum, you can let it ride, right? So that's sometimes you don't want to put a goal, but you want to put a stop loss instead. So a trailing stop loss really helps. So let's say if I bought NEO the second time on 27, my goal is I want to lose only $2 on this, right? It doesn't matter where it goes. So that's your goal, right? So if it keeps on going from $25 to, let's say, $50, you're still not stopped out. So you are still in the in that particular trade. And then the next day it goes $54, and from $54 it goes back to $45. The best part of that is when it went to $54, your trailing stop became at 52. So when it comes back from 54 to 52 that day, you're stopped out, right? So that really helps in a different set of goal, right? So you can have a set price as your goal, or you can have a trailing stop loss as your goal. Like, this is the max that I want to lose on this particular trade, right? So there are different strategies that you can use. So speaking of stop losses, this is one of the best tools you have at your advantage if you don't like losing money. I don't like losing money. I'm sure a lot of people don't like losing money as well, right? So stop loss is very, very important. I know a lot of traders and don't like stop losses because they are very convinced of their particular trade, and I really commend them for their position. But if you're not a professional trader, I really recommend using a stop loss, because you don't want to get caught up in any news cycle when you're busy with your day job, if you will. So a stop losses is always helpful. It will be very helpful in the long term. So there are different kind of stop losses to minimize losses and gains. My favorite ones are stop on quote and trailing stop. The trailing stop for options day trading is really good. Let's say if a stock picks up some momentum with volume intraday, you can enter in a particular call option along with a condition that you want to put a trailing stop of 10% or 20% or whatever you want. If that particular trade works, and if your setup is right, that would actually be really good, and you can make a considerably good amount of money on that. And plus, the best part of the T-stop or the trailing stop is that you don't need to monitor what is happening in that particular stop, in that particular stock intraday. So if you're already, let's say, put in a call option for that day, and you put in a trailing stop, let it go automatically, right? Like it will keep going, and it will exit by itself, and you'll get a notification, hey, either you made money or you lost money. If you really want to monitor, you can put in a stop on quote, and you can keep raising your stop on quote as it keeps going up. So that would be a manual version of trailing stop. But definitely each and every trade that I personally do, I like to put a stop because I don't like losing money on trades that don't work. Okay. And I think there's one more stop loss. It says OCO stop that I've seen recently. I haven't personally used it myself or even studied, so I might not know, but you guys might know if you used it.
So that's one cancels other.
I'm sorry?
That's one cancels other.
One cancels other. Okay, so either you hit the target or you hit the stop loss.
Yes.
Excellent. Okay, I should really see because that's part of the trade that you need to have a goal and your stop loss, right? So that could be good. I'll study more on that. Thanks, Bunny. Okay, say no to emotional trading. This is very, very important lesson learned very hard way. I'm sure everyone who is an amateur trader goes through it some point during the trading life cycle. Emotional trading is very hard, and we are humans after all. And if you don't have discipline, it's going to happen to you as well. So let's say you lost $10,000 a day today, and your account total value is only like $20,000. So you lost 50% of your account today. Tomorrow you're gonna go in. You are a little bit sad, depressed, disappointed, whatever it is. You go in tomorrow and you say, "Hey, today's the day. I'm gonna make $10,000. I'm gonna recover my losses, and this trade should work today." So I go in and I actually go into a very good trade and I make $1,000 on that trade. But what an emotional trader would do is, no, I don't want to get out until I reach that $10,000 recovery. This is your first mistake. You need to treat each and every trade as an individual trade. First of all, you need to analyze what went wrong in that first trade you did. So why did you lose $10,000? Was it because you didn't put a proper stop loss? Was it because the market just dropped on you, or the stock, some news came out and it just dropped like 10% of the value and you lost $10,000 on that option call or whatever it is, right? So you need to analyze what went wrong. But at the same time, treat it as one individual trade. Don't be emotional in trading. Otherwise, your winning trades after that will end up being losing trades as well. Like, let's say if you make that $1,000 the next day, take that profit. If that's your goal, take that profit. Don't make it so that I don't want to take profit until I recover to $10,000, right? So that's very, very important. Say no to emotional trading. Don't do it. It will eat up your profits and blow up your accounts. Right? Okay, this is another one that is very important in today's world, where we see a lot of alerts, notifications, advice from other people, services, subscriptions, whatnot. Right. So when you enter into a trade using the signals or alerts that you get, maybe from, let's say, from IBD or Gorilla Trades or whatever it is, right? So you get an alert saying that, hey, this is a good buy and you should buy it right now. And then they send you the signal to exit. So it's up to you to manage your own risk, right? They don't know what is your risk tolerance, and you don't know what is their risk tolerance. They might have made $100,000 that month, and they don't care if they lose another $10,000 out of it, right? But if that is your first trade and you haven't made $100,000, and you end up using that trade and they lose $10,000, you lose $10,000. Right? So you need to understand that you are essentially responsible to do your own trades. You need to manage your own risk, and you need to do your own due diligence. Like, hey, if I lose that much amount of money, if I lose 10% of the trade, I want to get out. So that is very important, because if you use their signal and if you exit or let it expire, the options expire on Friday. So if you let the options expire on Friday, they're not going to send you money to, when you lose money on their trades, right? Same way that you're not going to send them money when you make money on their trades. So you need to understand your own risk tolerance, and you need to understand that essentially you are responsible for making or breaking that particular trade. So you need to manage your risk properly if you're active trading, right? That is very, very important. Hedging. Hedging is important. Wasn't as important before for me, I've seen, but this year has been absolutely nuts in terms of the volatility in the market. And hedging has been very, very helpful. So since, let's say, January, end of January, February, start of February, right? So when the COVID news started, and the markets were still very strong until like third week of February, I started hedging a lot of SPY puts, SPX puts, VIX. I don't know if you guys know about TVIX and the story behind the TVIX as well. But those are the kind of hedging that I was doing. I didn't necessarily want to get out of the market completely because it was a very good momentum during the start of the year. Since the first day of January until the third week of February, the momentum in SPY and all the indices were really good, and the market was booming, right? So I didn't want to lose any profits or any gains from that momentum. But at the same time, I didn't want to caught off guard, which was very important. So I had bought a lot of SPY puts, shorted some SPYs, so shorted some Apple stocks, if you believe me or not, just to make sure that if and when the market breaks, this can it won't help me make money, but at least it will help me negate some of the losses that I might occur. A smart move would have been to just get out and let this ride out, but I did the other way around, and it's okay. It was a fun ride. And TVIX was I think one of the 3x VIX stocks. I don't know if you call it stock or ETF or just a tool, cash tool, if you will. So it was 3 times how VIX works. And TVIX, we had been buying. Me and my buddies, we had been buying in 10s and 12s, and then it decided to reverse split, and it lost a lot of value, and it went to I think $80 at the time. And even after going $80, it kept losing money to like $60, $40. So when it hit about like $39, $40, I think I bought a lot of TVIX at the time. And when the market crashed, that was a really helpful tool to negate some of the losses that I could have incurred. So I cashed out from $39 to I think first was $70, then $85, and then finally I cashed out everything at $100. TVIX this year went from $39 at that time to $1,000 when the volatility hit 80. I think VIX index was at 80 at the time, I think, and TVIX went up to $1,000. So it can really help you. It's definitely a cash tool when it's very highly volatile in the market. But basically, what I'm saying is hedging your position when you know that market momentum is really high, but at the same time you can feel that this market can have a correction or crash anytime, right? So let's say right now, the greed index, I posted earlier in the group that the greed index is over 90. I am usually very careful when the greed index is 90 and over. So today, greed index was 92. So what I did from my active trading, not my investment, but from my active trading account, I put 50% of my positions into cash, right? So the things that I thought that they could work, but I really didn't have any conviction, I cashed out, right? And I added some long SPY puts a little bit cheaper right now, I did some VIX UVXY puts, UVXY calls along with it as well, just to make sure that if market drops the 50% that I have still in my active trading, that I have positions in, I don't lose complete value out of it. So hedging definitely helps. If you have a lot of positions open, it also helps hedging overnight. So what I usually do is, if I have a lot of stocks in trading positions, I use with hedging with SPY. So I short, like, let's say I short 400 SPY stocks or 400 QQQ stocks, depending on what kind of stocks I have. And what this helps is, like, if the market goes up the next day, I know my positions are going to go really well. So the amount of money that I lose on my hedging is nowhere compared to what I will make in my positions. So it's just for a peace of mind, right? But if the market drops how it used to drop in like a circuit breaker, or even recently, sometimes it's been dropping like 1%, 2% overnight, what I do is cash out and then see what happens after that the next morning. And if it doesn't go back up, then I just close some of my positions. So that really helps you. Hedging really helps you minimize your losses more than maximize your gains, right? So some of the day trading strategies or trading strategies in general, I have listed over here that I usually follow. It's the 821 EMA rule. I put SMA, but it's really EMA. It's moving averages. I use the 8-day and 21-day. You can use it in daily as well as intraday. VWAP trading is something new that I picked up a few months ago. And what I've read about VWAP trading is, we are literally, when you're trading as an active trader, you're literally fighting against the robots, right? Most of the big institutions are using bots, robots, algorithms, and whatnot to do the day trading, right? And then they have their own strategies that they use. And what I noticed is that they've been using VWAP a lot. So VWAP trading is quite helpful if you're doing intraday active day trading. Then for dailies, I like bullish falling wedge. This is one of my favorite trading strategies, like setups. Flag breakout definitely works as well. Bull flag, bear flag. PEG, I recently picked up from one of my subscriptions. PEG is post earnings gap. It's really good, and it's usually on the daily after the earnings. The other one I think I mentioned in the group previously is the RSI. So if the RSI is about 80 and the stock is, the candle is above upper Bollinger, it's a very good indication for a short. In terms of trading, not in terms of investment. In terms of investment, you can hold it long because you might have a different goal in terms of investment. From trading perspective, that might be a good day to short that particular stock. And I've shown that before. Neo was a good one. I think Palantir today was, wow, that was amazing short today in Palantir. So these are some of the trading strategies that I like doing on a day-to-day basis, or even from a daily chart or intraday. So if anyone have any questions until now, let me know. Otherwise, I'll jump right into the strategies. And
That was a quick question. For intraday, what candle do you use? 15-minute or hourly candle?
I start pre-market with 5 minutes. So usually pre-market, you go in and you see 5, and the first 15 minutes, I want to see the first 3 candles and how it behaves, right? So I don't like to get into a trade in the first 15 minutes. I want to see how the trading picks up and then move in, right? So I use the 5 minutes for the first 15 minutes. And after the first 15 minutes at 6:45, I change to 15-minute candle, and the second candle starts forming.
And for swing trading, I'm guessing you're mostly using daily candle, right?
It really depends if you're doing swing trading on intraday options or swing trading in general on stocks. Then it really depends on a daily or a 5 or 15-minute candle.
Okay, got it.
Okay. So bullish, so this is a falling wedge. This is one of my favorite setups. I keep looking at some of these, and there are ways you can actually do it. There are patterns that you can use. I don't know how many of you have used Thinkorswim before, but I'm sure that you can use this on most of the trading tools or softwares which you're using. So falling wedge is something when a stock keeps on falling. So it made a high, it keeps on falling, right? And you can see it's forming a pattern, right? So the DKNG, this was pretty recent, right? DKNG went into this new cycle that all the sporting things are going to close. So the gambling is going to close, the fantasy football and everything is might not be as interesting. So it kept on going down, right? And so it created a falling wedge. And this is the 8-day and this is the 21-day. So you can see it was riding below the 8-day. I'm not very good at shorting, so I like to I like to be more bullish than bearish. So I waited for this setup as a from a bullish standpoint, and I usually use this. So this indicator is like, okay, this is trying to turn, right? So this is trying to turn, and this would be my entry right here. If you see, can you see my arrow? I don't know if you can see my arrow. Purish?
We see it.
Yeah, we see it.
Okay, perfect. So yeah, this blue line over here is the 8-day, right? So I write the 8-day and I see like, okay, it's getting close to 8-day. I want to jump in either over here, somewhere in this day, or I want to see after it crosses the 8-day. So yeah, anything would be a good trade. So this 8-day usually makes resistance, if you will. So you need to see if the 8-day is crossing or not, right? So you can enter over here, and if it fails, if it goes back down, you can exit. If it goes back, if it crosses this, then either you can stay in the trade or you can actually add to it as well. It really depends on how much you like this particular setup. I usually enter when it crosses the 8-day. I don't like to enter over here. I like to enter over here. But most people try to enter over here. They see the bottoming out of this particular trade, and they use this as a swing trade. So I like when it crosses the 8-day, and the next resistance is going to be 21-day. So this, if it crosses that, there's some strength to it. Now it falls down again, but as long as it keeps riding the 8-day above, it eventually becomes a very good setup. So for here, I think I bought like January, this was at 39. So in 40s, I bought January $50 calls. And just in, I think, 2 or 3 weeks, it came back up quite nicely. And right now it's riding the 52.75, right? So this is a falling wedge pattern that I really like. The same day, same falling wedge pattern, if you see, this is in Boeing, BA. So in Thinkorswim, if you use Thinkorswim, you have something called patterns. I'll show a live demo as well. Something called patterns will actually make these lines for you. Sorry. So this red lines that you see, I drew that red lines myself, and I want to see this one cross because I want to see how it goes, right? But Thinkorswim itself actually gives you a pattern as well. So if they see this is a falling wedge, they will show a pattern. And if the stock crosses that particular falling wedge, it actually gives you a good prediction as well. So when the vaccine news broke out this day, right, it was actually going up, and all of a sudden it went from like 160 to 175 that day. It opened up at 177, went back down, went back up, but that day it closed at 177 from previous day it was 160. So the falling wedge pattern gave us a prediction that this could go from 177 that day to 207 to 247 by January 2021. So it creates a green range that you see above. And what you can do is you can either enter the next day, but you see it opened up very high. So you might want to wait till it comes back down below and you have a better opportunity. So you wait for a day over here, you wait for this opportunity right there as close to 8 as possible. This is where you enter, right? So we entered some over here for the January $200 calls because the range was 207 to 247 by January 24, right? So we entered January $200 calls. And then on this day, so it was a Friday. So what we decided to do was this Tuesday or Wednesday was supposed to be, I think, a news cycle day, right? Where they were supposed to approve that Boeing Max can actually start flying again. So that was completely lotto pick that we did was a butterfly, because a butterfly is something that you buy $200 call, sell open twice the two $15 calls, and then buy open again two $30 calls. So it creates kind of a butterfly because you don't know where the stock is going to end up from 200 to 230, and you really think that it's going to be there in between that range. So you can do a butterfly. The butterfly over here, it cost us about 58 cents per butterfly. So I think some of us bought like 25 butterflies. Some of us bought like 100 butterflies. Maximum loss on that is the 58 cents that you invest or you trade. That's the cost of that particular trade. The maximum gain is if that particular stock on this Friday of next week ends up at 215, you actually make $1,500 per butterfly. So from $58, you can make $1,500, which is a huge amount of money, right? So the trade itself was not to make $1,500, but to see where it ends up. And anywhere close to $215, you can actually cash out. A little bit less profit, but what we, I think, made was $1,400% profit, which was like 50 cents to $7, I think we cashed out. So per trade, we made about 1,400% per butterfly. So that was pretty cool. So you can use this as a lotto, but the more important thing is that the falling wedge itself works, right? So this is a very beautiful setup. And if you're using Think or Swim, on a daily, when this prediction comes, it is usually pretty nice. And I personally really like it. It works a lot of times. Obviously, you have your hit and misses, so you have to have your due diligence and your stop losses prepared. But you can use it, if you really like it. So that's the falling wedge. Now, another pattern that I like is the breakout, right? The flag breakout that you see over here. So this is Moderna. Moderna was supposed to create a vaccine. This is all September, October, all the way through. And then I think this one is the election day when it jumped to the upper Bollinger. So we knew that the vaccine was coming, and Moderna is working on it. Pfizer is working on it. We knew that. So around, I think this, when the entire market was down, it was still close to the bottom of the flag. I think we bought some January $100 calls and some January $120 lottos in case it wants to go crazy. But the goal was to ride this upper Bollinger and to stay above 8-day, right? So this was, when it crossed this, it was a indication that our setup works. Our setup works. And then this was the day when it went to 105 pre-market, and the RSI was I think 90, 92 or 93 at that day. So I just decided to cash out at the open. As soon as it opened up, I decided to cash out of the $100, but I kept the $120 because those were lotto picks for January, right? So this was a good setup to get in. So now this trade is over, right? But then it creates a new trade. It creates a falling wedge for 3 straight candles. So you can see this falling wedge, and you want to see it stay above the blue line, which is the 8-day, and you want to see, you can enter sometime during this day, right? You want to see it hold this particular support level. You want to see it be green that particular day. So I entered again over here, but this time I didn't enter the $100 calls. I just entered the 120. I added them. So, and I finally cashed out this morning when it was around 118-ish in the morning when it opened up. I cashed out. So this was double trade. It was really good, and it actually covered 2 of the strategies that I like to use: the flag breakout as well as the falling wedge. Right. So Marna is really good in a sense, and it has obviously a lot of momentum to it. Both Myrna and Novavax. Novavax today was about 25% up as well. So vaccine names are picking up again. But this is it. If this goes to let's say $200 in the next month or so, I am out of that trade. I am done. I'm happy because that was the goal, and the goal was achieved. And right now, as you can see right down here, maybe I don't know how much you can see, but RSI was about 82 today. So it's pretty high. Might be a good short candidate next week. Let's see. Right?
Hey, Dhawal, the flag breakout falling wedge. So which part of this chart would you say is the start point of that flag breakout?
So the start point, as I said, if it's creating a flag, and if you know, a company like Moderna, you are expecting something out of that, right? You're expecting some kind of news. So whenever it's coming close, I didn't want to necessarily enter here because the next day was earnings, and I don't like to play earnings. I don't like to enter into a long-term trade when there is earnings the next day. So after the earnings, luckily this stock was still closer to the lower Bollinger. So I entered. You can enter on this particular day or on this day. My entry was around here, right? So this, when it crossed the blue line, that's the 8-day. This is usually where I enter, and then you get confirmation when it crosses 21-day as well. So these 2 days were the 21-day cross, right? So here it crossed 21-day. So that is a confirmation of the trade that this can work, right? And then after that, when the flag actually breaks out, then you see the real momentum picking up, and the vaccine news really helped. Right?
So truly speaking, let's say even if you didn't enter on 8 or 21-day, you could have started right after that when it broke, when the flag was starting to form at that point, right?
Absolutely, you can, yeah. But for me personally, over here when it breaks out, that's already 3 days into that particular range, right?
Trade. Yeah.
So if you enter here, you have a lower risk because your stop loss is if it goes below this particular line, lower part of the flag, if it goes below this line, that's your stop, right? If you enter here, your stop is all the way here, right? So your risk is pretty much higher to, I don't know how much reward at this line, you cannot predict that it's going to 130, right? True. But at this line, you can at least see that, okay, this is the trade. And if it crosses the flag, then it keeps going up. That's the momentum you want, right? So that is what the trade is. The trade is you enter here or even here, where the risk is pretty low on your stop loss. Right? And if it breaks out, you can actually add if you want to, right? There's everybody has different convictions. You can add if you want to. I didn't personally add. I like the setup that I had, and I just wanted to ride the blue line. And when I saw the RSI was that high, I was like, okay, time to cash out, right? Because when the RSI is that high and it's like there's no the Bollinger, it's not even touching to the Bollinger at that point, right? So you know that's a good setup for shorting. So after 3 days, you see that okay, it's back to the 8-day. You can either wait this day or you can enter this day. Either way, it should be a good setup, and then use 8-day as your stop loss, right?
Thanks.
Okay. All right. PEG. PEG is something that I picked up from one of my subscriptions. It's called Post Earnings Gap, and seems to be a very strong indicator for for strategy if you're using that. A lot of big institutions use this particular strategy as well. What PEG is, let's say this is check, right? So check over here. Before the earnings in May, it was around like I think $30 something, and the next day when after the earnings, it opened up at around $44, right? So it created a huge gap. It was like up 40 or 50% that day. Created a huge gap. You can either chase the momentum, but if you want to chase over here, I'd rather chase like after hours over here itself when it's picking up. But I don't tend to enter over here. But what I do is when I see a gap like this, the best thing to do is put it on your watch list, right? So when you see this going, this is the gap, right? So this is the line that you create. Now you want to see when it comes as close to this line as possible. So maybe this was close, and then you can really enter over here. And your stop loss becomes this line. If it breaks into the gap, then you get up. And then if it doesn't break, it holds the gap. That means the stock is really, really strong. And this price over here is about 52. And my goal was to get it to about $75, which is about, I think this was 82, if I'm not wrong. I can't see the value over here. So basically it went from 52 to 82, and that my goal was met. As long as your stop loss is this particular line over here, the gap, so the gap doesn't fill, you should be good. So that's the post earnings gap. That's a new strategy that I picked up during past few months, right? So this was check. And the same thing in Apple, right? So Apple in August, when they announced that they're going to do a split in the stock, and they had really good earnings as well, right? So the earnings, the stock opened up, I think 410ish, or I don't remember, around 405 or something like that, 405 or 410. So this price is obviously after split, so you can see like this is 102, so it should be around 408. But basically, this was the gap created, right? So this is from 94 to 104 is your gap. So what you want to see is you want to chase this. That day I actually chased it because when Apple announced that stock was going to split, obviously there's a lot of momentum. A lot of people wanted to buy that. I chased it. I bought some $120 calls for September, I believe. And I just wanted to see how it goes, right? So I want to see if it crosses 125. So it did. It rode all the way to 137. I think I exited somewhere around here because my goal was met. I took the profits and I'm out. And I really didn't want to do when the stock actually splits over here, right? So stock split around August 31st. So I wanted to get a week before out week before that. So that's the post earnings gap. You can study up on that, and actually could be really helpful. That's especially when it beats and creates a huge gap. Big institutions really jump in and can push that into the momentum that you want.
Dhawal, a question. How do you determine the strike price when you buy options?
I like to see what the option prices are, and what I'm comfortable paying, and I also like to see like how much more can the stock go. So 100%, I put myself like so at $100, at that point pre-split it was $400. So my evaluation was okay, like $450 or $480 would be a good price if you can achieve that, right? Because that is like post split, it would be $120, right? So $450 call for September was the one that I selected, I think, and that was perfect because it soared from, I don't remember, this is like 410 to like pre-split it was 500 something, right? Over here, this is 125, so exactly $500. So $450 call would be perfect in this sense. But again, it also depends on what is the value of that particular option that you're willing to pay, right? So if you want to just ride the momentum, and if you want, like, let's say 10 option calls to ride the momentum, um, you really can't buy $400 September calls in August for Apple for 10 option calls when if you want to really spend only like $1,000, right? If you want to spend $1,000, you want to choose 10 of $1 call options. Which are the $1 call options? Maybe it's $450 in September. That's what you want to see, right? So you can buy 10 of those and see where the stock goes. And as long as the gap is held, and as long as the stock is above 8 days, so this one actually went below 8 day, but the next day again it came back up. So as long as the stock keeps up riding the 8 day, and eventually your goal was met somewhere over here, you get out. So that's pretty much it. So it depends on the option value more than there's the stock value itself.
So are there any indicators you use to determine if one trade is better than the other?
I don't. These are the things that I see. Like the strategies are helpful. Indicators are used for you to actually be in a, like, they are good for entry and exit, and they are good to determine the strength of your trade. One of the indicators that I said, like the pattern indicator that I use for a falling wedge, I really like it because you can get the prediction. But apart from that, yeah, indicator is mostly like, if you get out of this, let's say here, you still made a little bit more money than you could have made over here. But if you want to ride it out, you can actually see that you can make more money over here, right? So this is an indicator you can use to enter or exit.
Thank you.
Okay, overbought. I think I mentioned this before. Overbought strategy. I really like it. I think I'm not a very good short. I don't like shorting stocks, especially when they have so high momentum. You can see this. This was, I think, Palantir. This was riding last few weeks at a very, very high RSI, right? But there was news circling around that now Citron really doesn't like, and Citron might actually short. So I tried shorting it yesterday. I put in some $25 puts for today, expiry today, but it didn't work, and I stop lossed out. This morning, though, when it went to 33.5, I think when it started going down below the VWAP, what at that time was 32. When it started going down below the VWAP and it broke intraday, um, the 30, I think 31 or 30, I bought $30 puts for today, expiring today itself. It actually worked because it dropped from $33 to all the way to $26. So it really, really worked today. So yesterday's stop losses didn't work, but today it definitely worked because this was at that time it opened up over here and it was very high above the Bollinger Band. It was the RSI was above 90, so it was an easy short, and hopefully a lot of people made money on puts today on this. Same one, I think Neo I mentioned earlier. In the group also, when it was riding very nicely. From an investment standpoint, it was a beauty to watch this grow. Even from the trades, I took a lot of trades from $15 all the way to 35-ish, I think. That was my last trade. But then I was waiting for the next setup to come up because this was like just chasing as the RSI was very, very high along this route, right? So this could have been a good setup, but I think the best setup was around here when the RSI hit 90 plus. It opened up above the Bollinger Band again. It was hanging above it, and then when some news came out, there's always a trigger that happens that pulls it below the VWAP, and then after that it just went straight down from 52 to I think 40, 47-ish. So it was a good trade at that day. It was a $50 puts really worked out well.
Hey, Dhawal,
So
what does VWAP stand for again? Sorry, can you repeat? I know you
yeah,
mentioned it earlier.
yeah, VWAP is an indicator that a lot of bots use, a lot of algorithms and high, I think, big institutions use. It's a volume weighted average price. So per day, pre-market as well as in the market, they determine what is the volume weighted average price, like what is the price that people are accumulating this particular stock at, right? So let's say this stock, the VWAP was around like $50 at that point, right? So if the VWAP is $50, that means a lot of people on average bought the stock at $50, right, for that particular day. Now, what happens if it goes below $50? If it goes below $50, a lot of people are going to say, hey, I am in loss, so I need to get out of this trade, right? So usually when the stock goes below VWAP, the active traders tend to get out of it because they don't want to be in a losing position, right? And in general, if you see an average of a price and the stock goes below that average, a lot of people who don't want to hold will not hold, and it's easier for them to get out of the stock. On average, if the stock price is above the VWAP, right? So if the stock price is above the VWAP, it will make some kind of assurance for the traders to stay in that particular trade, or people to stay in the investment because they want to see it grow, right? So it is harder for that particular stock to drop below VWAP at that point. So when a stock is above VWAP, the VWAP is used as a support. When the stock is below VWAP, VWAP is used as a resistance, and it goes both ways. And it's usually used in intraday more than in the daily chart, if you will. Okay.
Thanks.
So this is the VWAP trading that I'm talking about, right? So this was yesterday. It was a fail for Palantir. It was still on my watch list, and it opened up very high. So if you can see it, literally the VWAP is around like 30, 32, I think 31, 32 over here. And the first candle itself, it created a new high, but it immediately dropped back below the VWAP. So you know that a lot of people bought stocks over here because the average price at that point is about $32. So if it starts falling down, a lot of people are going to actually just remove their position or close their position, right? So it takes you to the advantage. So this could be a first maybe entry point if you want. But what I wanted to see was if it can go below the 8-day. So immediately when it goes below the 8-day, you can enter. And then when it goes below 21, you get confirmation of that trade. Right. So this is the VWAP. Below VWAP, below 8-day, below 21-day. I bought $30 puts for today, expiring today. And you can see it kept on riding the 8-day all the way down. And around here, I think it went into oversold position on the chart on RSI. So this was a good exit point. I mean, after that, you could have ridden some more because like 8-day kept on going down. It was still below. But for me, I wanted to see the RSI was oversold. So I got it out here. So either in this candle or you can get out in this candle. You could have gotten much more over here as well. This was in, I think, 26. This was 27s. This was in 26s. So you could have gotten a lot more. Right?
In this
So this
case, it's
is,
a 15-minute candle, right? Essentially. So you're looking at eight when you
yeah, this
say
is
8
15
day.
minutes.
Okay.
Yeah, this,
Okay.
yeah,
Oh,
sorry.
like that. Okay.
I just used the term 8 day, but
Yeah, I
it's
agree.
basically 8 candle. Sorry.
Yeah. Interval.
Yeah,
Yeah.
it's a 15-minute. Yeah. Okay. Bonus strategies. Friday Lotos. I really like Friday Lotos. So some strategies are when you're buying in the money and you are seeing good momentum. The stock is strong. It is considered like low risk, low reward kind of strategy because it will be very low risk in the money, but the stock keeps on growing very slowly and you will see your gains as well. But your profits will be minimal as well because it takes into account the option price value. Very high risk, very high volume is momentum stock, like something like Neo. You want to buy when Neo is 25. I want to buy $50 call option a month away, right? Which is very very high risk. You need the stock to go at least 100% of the current value in a month. That means it's very high risk. But if it does go there, it's very high reward as well. So high risk, high reward on those kind of out of money stocks. Friday Lotos is a completely different strategy where it's low risk and very high reward, right? So it's I don't usually put a lot of money into it, but I do like to play every now and then, especially riding the news cycle if there is a good news cycle on the Lotos because the stocks, I mean, the options expiring today are supposed to be like super cheap, right? Like you can get like pennies to the dollars. Like if you buy the same option call on Monday, and if the stock didn't do anything the entire week, the same option call could be bought today for like, let's say if it was $1 on Monday, you can buy it for like 5 cents today, right? So today, I think I bought a couple of Friday Lotos in Tilray and ACB. Or some news came out on Tilray and ACB on like there's some I think next week is supposed to be a hearing on the legalization of marijuana, and Tilray ACB is my go-to marijuana stocks for options. So what I saw was amazing. So I saw like Tilray was around like 7-ish. It went from 6.8 to 7.5 in a very, very high volume candle. So it was a complete breakout. And I jumped in. And in Friday Lotos, you can actually, go without a goal. You just want to see what happens, right? Your investment risk is very low. Your trade risk is very low. So I got $8 call options expiring today at 9 cents. For ACB, I got 9.5 expiring today at 8 cents. And ACB, I got $10 call options. Like these were even Lotos, which were about. So this was like I got it for 2 cents. I didn't really see that happening, but I was like I just wanted to play anyway, right? So you can buy like 100 of them at 2 cents for like $200 trade and see where it goes, right? So $200 low risk, very high reward. So this is what happened, right? So this is ACB. ACB. Let me just go into showing this. And share. Ooh, I'm sorry, I went way over time. Okay, can you guys see my thing or screen?
We can see right now your screen had frozen, but yeah, it's okay now.
Can you see now?
Yeah.
Okay. So ACB, this is what happened. So you can see it in the 15-minute candle, but I actually, when I see the breakout like that, I go back to 5 minute and see what happens. So the first candle obviously was the watch out, like something is happening over here. The news came out, so I bought like at the end of this candle, or maybe start of this candle, I bought like 9.5s at 9 cents. And my goal was like, if it goes to 30 cents or 40 cents, I'll get out of it. But you don't really need to have a goal, because these are lotto plays. Lotto play, you can, just go in with, like, you want to get some money. And around this, I kept seeing the continuation. So I don't know where it want to end up. So I saw $10 calls for 2 cents per option, right? So it's $2 per option call. So I bought like 100 of them. And then this ended up being a really good trade. So I got out of 9.5 because 9.5 was in the money at that point. So I got out around here when it came back down the first time. And I got about, I think, 9 cents to 36 cents. But I wanted to keep the $10 and see how far it rides. So I think this is where I closed. Probably I got 2 cents. I closed half of them at 20 cents, and the rest of it at 30 cents. So that's where the lottos coming picture. So I do like lottos a lot on Fridays, because the expiry date, you get very cheap penny to the dollar, and you can make like, I made about 1,000% on the half of ACB 10s, and 1,500% on the other one, right? So that's a good strategy on Fridays. That's something that I use as well. Okay, going back to the chart presentation. Friday lottos, yes. Oops. I'll go really fast in the last portion. I know we are way over time over here. Where is the Zoom meeting bar? So these are the election patterns that I analyzed before the election. So what I heard was the week before election usually goes down. So I wanted to see what happened before elections, right? Like, so in 2016, I saw a pattern that, it went down. This was the election day, week. Basically, this is the weekend, the line that you see. The Monday, Tuesday is the election day, right? So this a week before election usually goes down, and then the week in the election, doesn't matter what the result is, it's usually spikes right up. So I wanted to see the same pattern in 2012 as well. So in 2012, you can see same week before election, week into the election. This is, I think, the election day. So I wanted to see, like, this is 2020. No, sorry, not 2012, but 2020. This is what happened this year, right? So we saw the week before election, the stocks were struggling. This was all tech earnings, and everything was going down. So the analysis, the same bubbles that I saw in the before, maybe this goes over here as well, right? So what I should have done is done this research on Friday, but I did the research on the weekend instead. Could have been a much better trade, of course. So when it opened up on Monday, I actually bought some SPX call spreads, 340, like I think 3450, 3500 call spreads for $50. It was only like $1 to make $50. So like $100 to make $5,000, right? So we all bought some of those just to see if it actually, goes into the pattern. And what we saw, it actually did, right? So this was the pre-election week, and then Monday it opened up as doji. Tuesday we all know it rode up, and then the next day it just gapped up like crazy, right? So it actually ended up exactly as the pattern as before, right? So this is 352 was the target. You see this bubble, 352 was the target for the next week, and actually hit that 352 target next week. right here. So this was 352, right? So just something like you can make a lot of predictions like this from analysis of different events as well on news cycle. Quickly, trading tools that I use, I like to use are Thinkorswim from Trade and TradingView. I like Thinkorswim. That is my go-to trading for chart analysis. Different type of trades that you can do. Stocks, obviously, everybody knows longs and shorts. You can do calls. You can do for bullish options, puts for bearish options. My personal favorite is call spreads. It gives me, I can buy in the money and have a short leg on the out of money. That gives me high risk, low risk, high reward kind of strategy. And if the stock goes down, I don't lose as much money as I would in the calls options. On the other side, I don't make as much money if the calls goes bonanza as well, right? So I like to keep it safe and simple, low risk, still good reward. Put spreads if you are bearish on that particular stock, and then butterfly. Butterfly is something that I said we used in BA, like Boeing. When you know that there's big news coming up, but you don't know where the stock is going to end up, you can use a butterfly for very cheap, and when it's in the range, you can actually close out before it hits your target, and you can still make a lot of money. That's something I like as well. These are different type of trades I use. What's the reward of doing day trading or trading in general for stocks? If you can make $100, make $500 a day, it's like 120,000 annually, and $1,000 a day if you can do that, it's 250K annually. At that point, you can stop working and just go to a beach, buy a house, and just to stop trading every day. All right. Thank you everyone for listening. Please let me know if you have any questions.
Hey, Dhawal, thank you very much. We might have multiple follow-on sessions, break it down into basics, intermediate, and advanced. I hope you'll be open to that.
Sure. I'm still myself in the basic.
Okay. I'm not sure if it's called basic or not, but I'm sure a lot of people will appreciate even if you can break it down. Especially chart analysis is not that straightforward. But excellent presentation. Thank you very much, Dhawal.
No worries. And please let me know if you have any questions even after the presentation. If you'd like to contact me, you can always contact Purvesh and message me on the group as well.
Yeah, most of the guys are on our group, our Telegram. We are starting to migrate WhatsApp guys onto Telegram, so they are most of the guys are on Telegram. So all right,
Dhawal, Purvesh, one question: are you going to share the slides with us, or are you going to put that on the group?
Yeah, I'll do that. I'll send it over. I'll ask Purvesh where to send and then send it over.
Yeah, send it to me. We will upload it on our workplace, Nilesh, and on the group also. So that way it's sticky. We don't lose it.
Okay. Thanks.
Okay, excellent.
Hey, Shankar. Thanks, Dhawal. Thank you very much.
Yep. Hey, Purvesh, I have to drop out because
it's
waiting.
Fine.
It's
sure.
Friday night. All right. Thanks, everyone. Bye.
Hey guys, we have Shankar here. Actually, when I looked at his Excel sheet, what he sent me, I was amazed by how we all think we are planning for our term life insurances. We know what our expenses are, and when I looked at his Excel, I realized at least I don't know. So, Shankar, please demystify the complex topic for us.
Oh, okay. I'll try my best. And thanks, first of all, Purvesh and the entire team, first of all, giving this kind of an opportunity. And secondly, for all these kind words that you have used to introduce me. First of all, am I quite audible? Because earlier when I tried it, it was not so audible. Am I audible?
Yes, you are.
Okay. And first of all, thank you for Dhawal also for that kind of a presentation, because I'm not such a good trading guy, but the way he put it in a structured and articulated manner. So some of the jargons he used